Hello everyone, this is the weekly review for the EURUSD day trading strategies October 4th to 8th. There's quite a few questions that came in about Thursday's price action, so we're going to go through all the charts. We're going to focus on this video on when to expand targets and also looking at false breakouts. Those are key components and can often result in big moves in the other direction. So I'll talk a little bit about those and how those can help shape our trade selection. So first, we'll just go through the basics. This is pretty, how do you phrase it, generous. I think there was more potential out there than 11R, but I included a couple losing trades in the results, as we'll see. So 11 to about a 15R week, I would say. So still a little bit lower than what we were seeing earlier in the year, but this is the main reason why. We can just see this massive, this is a 4-week average. This is the full last year of volatility. So we can see the last couple months, everything's just been dropping off, the volatility in the EURUSD. So we were down to about, moving less than about 40 pips a day, and we're creeping back up. We're back up to about 55. So I always put the x-axis at kind of what the average is, and mine's been sitting around 55 for quite a long time now, right around this area here, because we've been in that stage going back to, the 7th month. So yeah, a few months now, where we were quite a bit higher before. So that's just going to reduce the number of trading opportunities we have a little bit, because when there's not as much movement, we're going to have more of those quiet days. We're maybe going to have some choppier price action, so we don't get those really clean or as many clean signals as when there's nice strong trends going on and lots of movement. So as we said, about an 11R week, give or take a couple R. 57% win rate, 2.4 to 1 reward to risk. You can see there were quite a few trades that got out of early. A lot of these were on the Thursday. Tougher price action day for sure. But also, we had a flat trade in there, which helps bring down the average loss. So we're still pretty close to that 2.5 to 1, which I like to be around for most of the trades. Rounded bottoms, the main winner this week, one double pump. Not a ton of trades, as we pointed out. 5 trading days, you're looking at about 3 trades a day, which isn't too bad in an hour and a half to 2 hours. So let's jump into the charts, because I think this is where things went. Yeah, there were some questions that came in, especially about Thursday. I thought the rest of the week was fairly clean in terms of price moves. And this one here, I included an extra R for a loss. And because I assume maybe someone might have taken this, we popped up a tiny bit here. So we've been moving up, and we can see this is pretty, just steady. We have no real big movements. It's all just, kind of choppy movement heading in here. The US is open for a while, just chopping around. And so there'd be no urgent need to jump into a trade. So we want to take that context into mind. So that's why I was also just logging in, but I don't think I would have jumped into this trade either way right here, because we just popped up a little bit, and we can see we're moving pretty grindy. But I did include it in the stats, because if you did jump into that one, that's technically a valid trade. We have a rounded top there. We're basically moving up, and then we have this shift to the downside. A pretty decent, strong one compared to what we've seen recently. So this was, an uptick in selling for sure. This was kind of the last swing low I was looking at. It took out that one. It also took out these lows here. So pretty decent size sell-off, especially by this point here. At this point here, this had this red bar. I kind of drew my own line on it, but the low's right about there. So it had taken out this swing low, and that's why I said this one would technically be valid. But it became much more compelling once we even got that bit stronger sell-off, taking out those lows. We have the pop-up, one bar, and then the drop. So nice 2 pip, I think it was about 2 pip stop loss if I recall, 5 pip target. You know, on a kind of grindy day, we want to keep those stop losses small. Not just keep them small, but only take patterns that allow us to have a small stop loss. This was a 1.5 pip price bar probably, so it allowed me to have a 2 pip stop loss because that's what the market gave me. If this would have been a 4 pip bar or a 3 pip bar, I wouldn't have taken that trade. Then this was a day of kind of misses in the sense that we had some really nice patterns that just didn't trigger. This is a nearly perfect rounded bottom in the sense that, you know, we have the strong drop, a little pop. Our next drop barely makes any progress. We have this little push up. Next drop, no progress at all. We have this shift to the outside. We take out this swing high, this swing high. I drew the lines in there for you. And we just had no pullback. We didn't really trigger at all. So nice run to the upside. Wanted to get into a trade there, but just couldn't because we just didn't have the opportunity to do it. Then again, this rounded top coming in here, we can see moving decently into here. We have the pullback, pops up, pulls back, pops up, but just 3 attempts to go higher here, all within probably about a pip and a half of each other. Just very little momentum there at all. Then we have the shift to the downside, so this one gets very interesting right around here. Would have been nice to see a little push to the upside and then roll over. Didn't happen. And then we kind of have the same thing, just nothing really great going on here. All these bars were pretty even, not much, not really any compelling rounded top trades. This one doesn't get below there, so we don't have the shift to the downside. We get a shift to the downside here. This barely makes any progress below that. So that once this moves up, again, only once this got above here am I getting interested in a potential rounded bottom, but no pullback, it just keeps running higher. This one, really nice kind of slow, grindy movement here. And, we can see price just trying to push up. Can't really do it. At this point, we haven't made a lower swing low. We're still sitting just above this prior swing low. At this point, only here do we make a lower swing low, below here and here. So pretty micro movement at this place because we can see this whole pattern is probably squished in within about 3 pips. Just pretty choppy. Overall lower movement day, just barely 15 pips. That's kind of the bare minimum I like to trade in. But then we did have that drop to it and a little consolidation, or any one of these little pops up. Either way, if your stop loss is above here, it doesn't get hit. And really nice sell off here. I think this one probably would have given us a little extra too, over 2.5. As I said, no trading that day, so I wasn't actually in this, but potentially good trade to be in. Here, this is where we start to get into what came into play on Thursday as well. When we look at a daily range, we want to assess how, or any breakout, if there's a sideways range and the price breaks out of it, how far does that price have to move outside of that range to be considered a good solid breakout? And I don't have a defined parameter, but it's how the price acts once it breaks through those levels. So here was probably the daily low. I don't have the rest of the chart on here, but usually when I draw these, it's around the daily low, or maybe this area was tested a couple times. So either way, this was an important low. And the price breaks through it. Nice solid break, really moving hard through there. And this is actually pretty good action right here, where it comes back, tests that area, and then starts to pull away again. So I'm not going to take a trade off that level, but that's information I'm going to use to help assess whether this is likely going to be a breakout that fails, and then we start hitting higher possibly, or if this is a really solid breakout and we're likely going to continue lower. So we're always just looking at the information. Support and resistance are just areas, important areas to look for information. But then we start to go and we can't even get back to this point here, and then we drift up past that higher low. Now we've just barely gotten above it here, but it's still, after this big sell-off, if this were, we've just broken the daily range, if this is really going to sell off, you'd think we could probably hold this level, because anyone who wants to get short now is potentially looking at this area. This was the daily low, all the stop losses. If you were long at any point in the day, your worst case scenario stop loss is here. A lot of people would have had them up here, which is also why once this started to roll over, we break here, 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 here. I saw someone on Twitter call these types of trades a pivot machine gun, which I quite liked. When you have a whole bunch of lows or highs in very close sequence, and all those little highs and lows have potential stop loss orders below them, because anyone who is long here has stop losses here. Anyone who's long from here has stop losses here. Anyone who is long here has stop losses here. So it's just, a cascade of stop losses can get triggered in this type of scenario. So you have this massive sell-off, which doesn't always happen, right? Because, depending on the composition of the market that day, there may not be a ton of stop losses or not as many day traders in or something. So we're talking about things that happen 65% of the time, 60% of the time, 70% of the time, 55% of the time. They don't happen all the time. It's just things to be aware of that occur more often than not. And so here we have this cascade of stop losses getting triggered, and then we have the last line in the sand at this point. So basically, if you were long any time in this entire day, your stop loss would probably be worst case down here. That gets triggered, and if you wanted to get short and you thought you missed it, you'd probably start putting out a sell order up here to try to get short close to this area, because the price ran past it. So it's like, oh, if I can get a little bit better price, get short up here. But the price just keeps drifting up. And so this is a potential rounded top here, because we start to see that shift to the downside. But it's not super compelling to me because we're right in that false breakout area. We didn't have a really hard breakout where, we're way beyond the range that we were in. If we fell down here, had a bounce up here, that's not false breakout territory yet, because we're still well below that prior low. But by only dropping a bit below it, and now we're trading in that area again, we do have a potential false breakout. So we either need to wait for evidence that this is going to go up, or wait for evidence that this is going to go down. But either way, we don't have it here at this point. The first kind of thing I noticed was over here. Is now we've been moving sideways for a while. We have this little pop up here, and we're still kind of in that original breakout area. No real triggers to get long here. We have the down, up, but we don't move above that prior bar. And so this one, you're not going to be able to get long anywhere in here. By the time this bar occurs, we've actually made a slightly lower low. So that would shift the bias back to the downside. But are we really in a strong selling situation at this point? Let me just bring some up. So right here, are we in a real strong selling situation? We are starting to roll over. We've just barely made a lower swing low. So we'd still need more evidence that we're going to drop. So we do have this pop back up, and then we start to shift a little lower here. But we're basically just chopping sideways, and we're right on this original breakout area, the day low. This move up quite strong. This drop down. Look at how many bars this takes to erase that 1 or 2 up bars. 1, 2, 3, 4, 5, 6. 6 price bars, and then another 1, 2, 3, 4, 5 to kind of get back to that low. So we're talking about 11 minutes of selling to erase one basically big bar of buying. So not a real strong shift to the downside by any means. So this is why I opted to stay out. I did include a 1R loss in the stat if you had gone short here, because we had made a slight swing low there. We have the shift up, a little pullback, and then we roll over to the downside. But we're right on that kind of cusp of, is this a false breakout? Is this not a false breakout? We don't have really strong selling to initiate that trade in my mind. Here we have a little shift up. Then we drop right back to the low. So no opportunity to get long if you had considered this a rounded bottom or something. This just drops right back to the lows. At this point, we managed to get maybe a pip or so above this range. Not super compelling again, but my thinking was we tried multiple times to drop and we couldn't. So maybe this is the time that we're going to start going long. We did have the shift to the upside. We have the pullback. Now let's see. We're back above our daily range. And especially this pullback occurred above that prior daily range. That's an old support level. And so we are in that this move to the downside was all what I call a false breakout. It tried to go lower. It couldn't sustain it. Now we've shifted back above it. We had the push up. We're well up into the range we were before. Pulls back, doesn't break to a new low, pretty much stays there, doesn't get to this prior low, and we see the shift to the upside. This was a little unfortunate. I got ticked out by like 0.1 ticks there, or 0.1 pips. Stopped out, but jumped right back in, and was able to make a bit of it back on the pop here. And then news takes over, and so was out just before that. So this is when just having that understanding of the daily range or not necessarily daily range, but just those support and resistance levels and how the price acts around them can give us a lot of information. This day, I opted not to take any trades. We were just over 10 pips, and that's just coming in here. So this was 10 pips right about here. We move incrementally above it. Little false breakout there, falls to the downside. This is also what I talked about, is that as prices push into these areas, they tend to break them. This was a point I made on Facebook, and a few people said, but I thought support is, where prices stall out and tend to reverse off those levels. And this is where we have to be aware of what our beliefs are and if they align with a strategy that we're trading. And they shouldn't conflict too much, while they may, depending on what your beliefs are about what price action will do. But if you really believe that the price is always going to bounce off support, we want to check if that's a valid theory based on how we're trading. And we can find evidence of times when, oh yeah, there was the low here, gets close, bounces off, gets close, bounces off. But if you really look through all the charts and find evidence, you're probably going to find that just as often as not, the opposite's going to happen. The price is going to just push through a prior high or prior low, where it's going to, test those areas. So be aware of if something you read somewhere but haven't validated it or tested it, but you took it as truth, is actually truth. We want to, as much as possible, look for evidence to confirm our beliefs about the market. And these run deep. You might think passive investing is fantastic because Warren Buffett said so, and that's could very well be true, but you want to verify that. Or, someone said day trading can't be done, and that's stuck in the back of your head. And so you have this belief that no matter how much you kind of practice, there's this little voice in the back of your head that says, I'm never going to be profitable at day trading. This is useless, and you feel like you're just kind of wasting your time, even though you keep doing it every day. But if that belief's there, we have to get rid of those things or like root them out, because they're going to always like sabotage our efforts. So just something to be aware of. We'll talk a little bit more about that in a second when I talk about expanding targets, because it came up on that topic. So by this point we've moved 5, 10. We still haven't got to 15 pips of movement. So nothing really super compelling in here to me for sure. This got a little bit more interesting, and in hindsight, I probably should have taken this one. I think I was letting myself do some other things. I was looking at the price action saying we haven't even moved 15 pips. I'm most likely just going to sit this day out unless we start to see a lot of movement. We didn't get a ton. We got a little bit extra. But this is a pretty, slow move up. Nice strong shift to the downside. We clear below this low. Little pop up. So a nice potential entry short there. Short entry there. So that would have been, a 2.5R win as the price falls down here. Target would have still been within the kind of range that had been established during the day. So even though it was a choppy day, that still would have provided us a really nice target down here somewhere. This was the day that some people said they struggled with, and I totally agree. It was a choppy day. I had a bit of my smoothie blew up in the kitchen, so I was cleaning that up, and so I missed this first part of the day. And I agree, this was the tougher part of the day, and I thought this was a pretty clean setup here. We have the drop, move to a new low, barely makes any progress, shift to the upside, pretty close to a matching high, maybe a tiny bit lower, but overall I thought this was pretty close to a great pattern. Little pullback there, nice little 2-pip price bar. It might have been even smaller, and I think it came within about 0.1 or 0.2 pips of my target. And when that happens, if it's like a pip away, I don't really consider that close. But when you're getting to, like, the price is basically touching your order almost, but not filling it, in those cases, I'm more willing to just take my profit, because you're pretty much at that 2.5. So for the stats or whatever, I put in 1.1, and that was giving it basically till it broke back below the consolidation. But when it's pretty much touching your order but not filling it, you can close. I have no problem closing out that trade, even if it's like if your risk reward's like 2.3 to 1 or 2.4 to 1, you're close. You've basically made that trade. So this one could have been even higher, but I think at least 1.1 on that one. This one, we have the drop, rolls over again. So we've been moving up. We have this sharp drop to the downside. Then it almost immediately kind of stalls out, and we have this choppy price action, which then leads to a potential rounded bottom. And we didn't get the signal that a rounded bottom could be a potential until here, because we get this shift up. So just kind of ignore this line here. We're still just looking at this rounded bottom, and we're short still. We get this shift to the upside. So the price is pretty hesitant. And again, this one was about half a pip, maybe even a little more. So I was willing to give this one a little bit of time. Also, my thinking was we had anyone who had gone long in this area here had a stop loss below here. My thinking was the price would try to dip below this level. The question is just when is it going to do it, on what time frame? Or not what time frame. Is it going to do it in the next 5 minutes? Is it going to take 15 minutes? And what's the price going to chop around and do in the meantime? Eventually it did drop below that level, but we'll see what happened here. I got a little tricked, you could say. So we have this shift up and the pullback, we stall out above this low and start transition up. So this was the point where I said, okay, we do have a possible rounded bottom going on here, and this is the point to get out. So another partial profit there. Now, if you view this as the shift up, this is the pullback and the move to the upside, we do have a potential rounded bottom there. I did put a note in here, if I was trading this, for the reasons we've started talking about in this video so far, if I was trading this, I would not have taken this trade. The price is highly likely to take out the daily low after getting so close, and after spending that much time there, there are loads of stop losses sitting there. Right? We just started popping up here. So we have stop losses right here from people who got in here. From people who are maybe in a little earlier, they might have stop losses down here. From the people that were in a long time ago, they potentially have stop losses here. So we know that below these lows is a collection of stop loss orders, which market makers love to take out. And this does not just apply to Forex. This applies to every market you will trade. You will see the same types of things play out. I do find Forex, it tends to take out those levels a little bit more than maybe a stock would, but it will occur in all markets. So this one does take it out eventually, and this is why I was not interested. If I was personally trading this time, I would not have taken this rounded bottom. I want to also point out, on very low movement days, when we're moving like 10, 12, 13 pips in the whole day, I'm more likely, if this had just been chopping around all day, I am more likely to take this trade because there's low movement, low enthusiasm, the price is grinding around all day. So maybe I'd take this one if we had just been chopping around all day. But we'd actually had some pretty big movement coming in. The day's been fairly active. You know that there's going to be lots of orders out there. So I'm not going to take this one. And even on those quiet days, like this one, the odds of a nice big trade are much better after the price has, kind of done a false breakout of the daily range. So even any one of these levels, we have the pretty hard sell-offs after the price tries to move above and fails. So price chopping around sideways has a bigger false breakout here, and we get the big move to the downside. Here, I prefer going long after the false breakout. Here we have the same scenario we talked about before. This is not a shift to the downside. It is in this one moment. Right there, at that point, we can say, okay, we've had a nice strong shift to the downside. Let's see what information this gives us. Almost immediately fails. The price moves right back above the low point. Box pops into the prior daily range, tries to move back lower, cannot, moves further up into the range, pulls back, cannot make any progress to the downside. So this to me is a false breakout. This is an overriding strong upside signal, which means I basically want to get in on any type of signal I can. I'm going to look for a rounded bottom. Even if it's not perfect, I'm going to take it. If I see some sort of double pump entry, some sort of snapback, anything, it might not be a perfect pattern, but because I have this big false breakout helping to fuel the price to the upside, I'm going to take that pattern, even if it's not perfect. So here's the example. We drop, we had this low, price pushes up, makes a higher swing low, so even an entry here would have been okay. I did opt to wait a little bit, And by this point, we're getting pretty close to that prior swing high. Price has made, tries to drop here. So if it shifts back up, we've made 1, 2, 3 higher swing lows in a row. Or sorry, well, 1, 2, 2 higher swing lows in a row. So this was one I had to be in. So you could have taken the entry there or there. It's not a perfect rounded bottom, but because we have that compelling evidence of the false breakout to the downside, we've moved well up above that breakout level. I want to be in that one. Here's another thing that people were asking about. How do you know when to expand your target? And again, it's that kind of what I talked about, the stop loss orders getting triggered, the cascade of stop losses, or what someone else called a pivot machine gun. So the original target was right about, I think, here. Yeah, so it probably would have been right about there. The 2.51, which sits right below this high. And so I opted to take a little bit bigger target on this one. I think I just put it about half a pip to a pip above this swing high. And the reason was that we've just had a big false breakout to the downside. So we've had selling most of the day, which has really culminated with no more downside, and now we're starting to shift to the upside. And after these false breakouts, the price can move fairly aggressively the other way, as basically all these people who went short in here now realize they're long. They have stop losses up here, and anyone who's been waiting to buy is also seeing, this swing low, not a lot of progress. Oh, it tried to go lower. So we almost have like a big rounded bottom pattern here from this low, this low, this low, making little progress. And now we're starting to shift to the upside. So we have the sellers who start to realize like, oh shit. And then we have the buyers who realize those guys are stuck and are probably going to have to pay the price for it. So we have all these little areas of stop losses. One right here, probably one right there, and one right there. And so they're all pretty close together. And when that happens, you get that cascade. So you have the first one that triggers, it pops the price up a pip and a half. The next one triggers, it pops the price up a pip and a half. So you have these ones, trigger these ones, trigger these ones, and then this one was a little bit bigger gap, but you know that this was kind of the high point of the last couple hours. There's probably a lot of orders sitting up there. Switches, boom, 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 takes them all out. So it could have been even maybe a little more greedy, use the aggressive trailing stop loss, which is just moving the stop loss behind the low of each price bar, and would have been able to get out there, but it wouldn't have made a huge difference. So that's why on this one I opted to take a bigger profit. Let's go to the next trade. Nice rounded bottom pattern here. This is strong acceleration. I was not going to short into this. Yeah, we kind of round off here, but one of the things we want to see is we actually want to see slowing. When I say there's no slowing on the left-hand side, that's this initial move in. And it just really strong acceleration in there. We have a bit of a pause, and then it starts to drop. Ideally, it's, it can move up strongly, but then we'd have to drop, try to move higher again. We did that a little bit here, but this was pretty strong. And so to me, this was looking like we've shifted to the upside. If you had taken a short in here, you actually would have won on it. So if you did, good on you. You made an extra 2.5 R in there. This one, strong drop, big pullback, tries to drop again, no progress. Pop tries to go again, less progress. We've made a higher swing high. Higher swing low, sorry. At this point, we have now made a higher swing high. We've shifted to the upside. Little pause bar there. This was the pullback. And I was thinking that we've now have this high, and that got very close to that swing high. So again, we have that pivot kind of machine gun, where if the price can rally back up to near this high, it very well could take out this and this. And they're pretty close, but even if we can add an extra pip, 2 pips on our target, that's giving us an extra half R, 1 R. That can make a pretty big difference when you do that once or twice a week. That's an extra 1 to a couple R on just 1 trade or 2 trades. And sometimes these, you can have like 5 R trades once you start really seeing how these kind of pivots can get triggered. Anyway, so I was long here and I'm waiting for this to get triggered. We get really close there and we pull back. And this is a little bit of a rounded top scenario here because we've pushed higher. This doesn't make any progress, and then we have this little shift to the downside here. And so at this point, I do still think, just like over here, I thought the price would take out these lows because, again, this doesn't happen all the time, but it happens quite often. I'd say 60-70% of the time that this is going to get taken out eventually. But how long am I willing to hold if the price just keeps wiggling and chopping lower? So once this little rounded top pattern here, I wasn't interested in trading the rounded top because I thought this high was going to get taken out based on these pivot levels right here. But I can't just keep holding it either. So once the price made this pop up and then shifted lower, actually it was this little pop up here and then turned lower, I got out. And you could have also got out right there. So this was a flat trade, 0 R. Nothing lost except for the commissions. But what we have to remember is even if we have an expectation, the market's going to meet that expectation on its own time frame. Like I said, it could take 15 minutes for this price to drop through here. It could take 15 minutes for the price to get up here. It could keep dropping. We could even drop all the way back here and get a huge double pump, right? We had this huge, big rally up, pull back, push right back to the high basically. So this could come all the way back here, form a double pump, even maybe break below it a little bit, and then shift to the upside. And my idea that these highs could be taken out could still be valid, but if I imposed my will on the market and kept buying, thinking that this was eventually going to do, we could be facing multiple losses going long all these times just because the market took longer than we expected to do something. So even if we have an expectation, or maybe not even an expectation, but I know that there's a probability that these highs are going to get taken out 70% of the time, what I don't know is how long it's going to take today. Are those highs going to get taken out in 5 minutes, 20 minutes, half an hour? So I have to take my trade, but if evidence comes up contrary to that, I have to get out. And so this was a valid exit to get out on because we'd had a pattern going the other way. But the overarching evidence, I would say, suggested still higher upside. It does eventually take out those highs quite aggressively. I was sad I was not in it. I was looking at this as a rounded bottom. I started to draw it in here. I would have loved to have seen just a little pullback here to get me in and validate my original idea. Give me another 2.5 R. It did not happen, but it did give one here. So let's talk about that trade. We have a double pump. Double pumps require clean waves. We don't just want sideways price bars. We want to see the actual up and down movement. On this side, we don't really get that. We have the move up, basically a 1 bar pullback, shift to the upside, but here we start to see a cleaner pullback. 1, 2, 3 price bars, little stall out, little false breakout below that low, which I also liked. Really small stop loss, pretty easy 2.5 R there. So that was Thursday in a nutshell. Really consider these ideas of the false breakouts and the cascading stop losses for when we can increase our targets a bit. Friday, non-farm payrolls, usually a little more active day. Definitely some big swings in here. Possible rounded top in here if you had opted to take it, but it was really big price bars no matter what. So here was basically the first pullback. Move up a little more hesitant than this move up. The drop, new swing low there. Rally up. So if you'd taken a short here, your stop loss would have had to be up there. That looks like probably about at least a 5 pip, 6 pip stop loss. Not very compelling to me. I like to keep them around that 2.5 mark. Was noticing this really big rounded top coming in here. This one was really strong. So let's talk about this big pattern first. So there was this move up here, followed by this move up here, which doesn't make much progress. We had this big shift to the downside. I was hoping to see a bigger pattern come in here, maybe see a small rounded top. Then we have a small rounded top combined with a big rounded top for a big sell-off. But this one just sold off right away. We didn't really get any short-term pattern to tell us to get into this. And I don't like just trading big patterns, like this. I would need to see the pop up and then actually see like a smaller rounded top or a double pump or something. Here we had this smaller potential rounded top, and I kind of said, like, I wanted to tell myself I should be in this. And because after I saw it drop, I said, like, what did I miss there? Did I not take that trade because I was scared, or did I miss something? And it just wasn't quite right, though, because we had pretty strong movement here, like just these big green bars coming in here. And we have the drop. Even this price bar doesn't drop below this one. So there's no shift lower that's really compelling after this, big spike up. At this point, this is a pretty weak up move that fails right away. But at this moment, I was still thinking this could go either way because we haven't really shifted below a swing low to trigger the rounded bottom. That only occurs after the trade takes place, and then potential trade would have taken place. We can start to see the selling kick in, and then it's gone. So it was nice, if you got into it, you made 2.5R, but really in real time and looking back on it, the evidence just wasn't there for this pattern because we just did not have the shift lower, and we had a pretty strong left side. There's a lot to cover this week. Interesting one again here. Likely going to take out these lows. So it took it out there and came back. So this is a false breakout here. The thing to be aware of is that it only took it out by a tiny bit. There's, people will use we use really tight stop losses, like 0.2 pips below or above the high. A little bit longer term traders might be using 1 pips, 2 pips, 3 pips, 5 pips. So especially after a big news event where probably billions of dollars changed hands, and anyone who was in from this low here and has a stop loss below has not been touched this entire time that billions, trillions of dollars has been traded on this news event. And yeah, there was likely some hanging out below this level too. So there was the option to get short here, but I'm not going to, even though this was potentially going to, try to clear out all these stop losses, I'm not going to take this short. So you did have a bit of a rounded top scenario here, nice shift to the downside. You could have taken this one, and it probably would have hit your target eventually. But yeah, we don't know how far that breakout's going to go, so I wasn't really interested in taking this one here. We have a big double pump here and a double pump variation right here where we have the drop, move back up to a high or a swing high, right back down to the low. The next rally comes up to that prior swing high. This double pump, huge stop loss. This green bar would be your trigger bar once it got taken out. So stop loss up here, you're looking at a 5 pip stop loss. No thanks. We drop back to the low, little pop up. So this one, a valid double pump variation. I'm not interested in it again because look at what we're doing. We're hanging right around that breakout point. We've tried to go below it, but we have not made any progress, and we're just oscillating around that breakout point. If this was a strong breakout, all the price action would be taking place below this point. The fact that it's taking place in between means that's not as much selling pressure as I want to see. So I actually ended up taking a long here once we stalled just above this prior swing low. We drop, trigger bar here, and then I'm waiting for the breakout above it. We get a very quick breakout, and then it very quickly fails. We get a strong sell-off, but then almost immediately we move right back above that kind of key level and continue to the upside. Big rounded bottom, right? Tried to go lower twice here, didn't make much progress. Here, 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 here. 3 lows, very little progress overall. Then a very strong shift to the upside. I was hoping there would have been something in here to get me long as well. A little pullback, nothing happened. But we do get a big pullback here. And this looks like it's pretty extended because we've had this long rally. But if you look at the last swing high was here and we draw it across, we're still inside that pattern. If you've taken the EURUSD day trading course, you know that entries have to occur within proximity of the pattern. And this pattern, you know, this was the last swing high. So this, we want our entry has to occur. This is kind of the highest point it can occur. It can occur anywhere down here up to probably about here because at that point we've shifted back to the downside. So anywhere area in here is okay for an entry. Very clean. And I pointed this out. Did I put it here? Yeah, this is a big pattern, but notice every single wave is clean in that there's no like, an up wave isn't made of like all these little gyrating waves, and down waves aren't crazy like this. You know, this down wave is kind of a bunch of wiggles and choppy lines. So this big pattern, it was made up of kind of unclean waves, which means it's going to be harder to pick an exact entry point when all the waves are doing this. But here, it was drop, pop, drop, pop, drop, pop, drop, strong rally up. Our pullback clean is just a series of red bars, one green bar, once we get above that, going long, and a nice way to finish for 2.5R. So again, looking at those key levels, is it a breakout? Is it a false breakout? Wait for that evidence. When we're right around those levels, it's usually, yeah, we're in that kind of flux state. We don't know. But kind of at this point, like once we have start moving our price action back above that point, we know that we're in a false breakout, especially once you start to get your first swing low above that level. You'll notice that same pattern occurred here. We drop above, rally back into the prior range. The pullbacks hold above that level. So a few takeaways from this week for sure. Hopefully those will start helping out with your trading and making some other decisions, and possibly just noting some of the bigger patterns that can play out after those false breakouts, because we'll often see some pretty strong movement. So I will stop that there. This has been a long video. Thanks for hanging in there, and we'll see you next week.